navigating economic uncertainty and market dynamics in 2025. Welcome back to Chaos and Capital, the only place where market sentiment and economic analysis come with a side of fish puns and Gerald's unsubtle pleas for subscribers. Gerald, our Chief Mascot Officer, is here to remind you to hit that subscribe button so he can afford premium fish flakes. Let's dive in. The U.S. economy is walking on pins and needles as markets maintain a cautious optimism. Think of it as standing on a paddleboard in the middle of a storm. Analysts note that while the consumer base seems stable, still buying their Starbucks and streaming services, the new administration's looming policy changes have investors holding their breath. Will they stabilize the boat or tip it over? Nobody knows, but everyone's bracing for a splash. Speaking of the new administration, Donald Trump is almost back in the Oval Office, and his economic policies are making waves already. Remember the Trump-era tax cuts and tariffs? They might be making a comeback. Scott Bessent, poised to be the next Treasury Secretary, is leading this economic charge. Analysts are split. These policies could either accelerate growth or throw a wrench into the economic engine. Either way, all eyes are on Washington as we wait to see which way the fiscal wind blows. Over in the bond market, yields are sinking like a lead anchor. Investors are playing it safe, and the Federal Reserve's potential rate cuts in the first half of the year are keeping things interesting. It's a dovish tone from the Fed, but inflation concerns and tariff impacts are looming like storm clouds on the horizon. It's a delicate dance, and the market's trying not to trip. On the geopolitical front, U.S. China relations are back in the spotlight. Tariffs are the administration's favorite negotiating tool, and they're not afraid to use them. Analysts warn this could add volatility to an already fragile economic landscape. It's like playing poker with your biggest rival. You've got to know when to hold them and when to fold them. For now, the stakes are high and the chips are down. Sector-specific challenges are bubbling up too. The tech industry is facing increased regulatory scrutiny. Imagine trying to innovate while someone's constantly looking over your shoulder. Not fun. Meanwhile, the energy sector is wrestling with potential deregulation and the shift to renewables. It's a tightrope walk, balance innovation and compliance, or risk falling off altogether. So, what's an investor to do in these turbulent times? Analysts recommend diversification. Think of it as Gerald's survival strategy. Don't put all your fish flakes in one bowl. Spread your investments across asset classes and geographic regions. Defensive assets like utilities and consumer staples are the market's equivalent of a life jacket. Not flashy, but they'll keep you afloat when the waters get choppy. Zooming out to the global economy, the forecast is cloudy with a chance of recessions. Major economies, including the US and Europe, are teetering on the edge. GDP growth is slowing, unemployment figures are a mixed bag, and consumer spending is under pressure. Inflation remains a persistent problem, driven by supply chain disruptions and rising energy costs. Central banks are tightening monetary policy, trying to curb inflation without triggering a recession. It's a balancing act worthy of Cirque du Soleil, but one misstep could send the whole thing tumbling down. Meanwhile, the geopolitical landscape is as volatile as ever. Rising tensions between the US and China, the ongoing conflict in Ukraine, and sanctions on Russia are keeping markets on edge. These issues are more than just headlines. They're shaping investor sentiment and market dynamics. Add in concerns about energy independence and sustainability, and you've got a recipe for uncertainty. On a lighter note, the world's biggest lithium-ion battery storage facility in California decided to play with fire, literally. Toxic smoke, evacuations, and road closures have residents questioning the safety protocols of these energy solutions. It's a reminder that innovation comes with risks, and safety measures need to keep pace with technological advancements. And let's not forget about ESG. Environmental, social, and governance factors are becoming increasingly important in investment decisions. Companies that prioritize sustainability and ethical practices are attracting more investors and consumer support. It's not just about doing good, it's about doing well. So, What's the takeaway? 2025 is shaping up to be a wild ride. The interplay between economic indicators, geopolitical tensions, and market dynamics will keep us all on our toes. But remember, whether you're navigating choppy waters or smooth sailing, Chaos and Capital is here to keep you informed and entertained. Don't forget to subscribe and keep Gerald happy. Thanks for watching, and we'll see you next time.